The top story this evening, a shaky start to FY17. Growth in the first 3 months of this financial year is at 7.1%. This is well below the CNBC TV18 poll, which projected the number at 7.5%. Mining and construction are the main culprits, and manufacturing remains steady, and agriculture has slowed down marginally. So that was the basic the data points of the GDP growth. But let's take it straight to our in-house expert on this one. Lata Venkatesh is right here with all the analysis. Lata, good to have you on the show. These numbers are disappointing.
Yes, a 7.1% GDP growth is disappointing. There is a bit of a conundrum in that the GVA number is higher. Normally, you add to GVA the taxes and subtract subsidies and you get the GDP. Since indirect taxes have been rising, so far the GDP has usually remained about 0.2 basis points higher than the GVA. This time around, it's the other way around. So one needs to find that out. And actually, we have a gentleman who would explain this extremely well to us. Mr. TCA Anant, the Chief Statistician of India, the head of the CSO, joins us now. Good evening to you, Dr. Anant. That really is the first question. This far, because of higher indirect taxes and fuel levies and falling subsidies over the years, we saw the GVA being lower than the GDP. Why is it this time that the GDP is lower?
For exactly the same reason. If you look at the government accounts data, which is published by CGA's office, you will find that the first quarter, that is April to June, has seen a very sharp rise in government subsidies. In fact, we've given the details somewhere in the press note, you'll find it. There are 2 points to note. Indirect taxes are rising, but at a lower rate than last year. I think they said that excise duties grow at 61%, customs at 18%, and service tax at 29%, compared to 104, 22, and 14 over last year. But subsidies grew by 53% as against a negative 26% in the previous period last year. So what we had last year was a compression in the payout of subsidies in the first quarter as against this year, where there has been a significant payment. I think we paid about 40% of the budget estimate in the first quarter.
Okay, but you know, we actually didn't see any subsidy payments increase in the budget itself. Are these just that the payments have been made in advance, or did some actual subsidy amount go up? I mean, were there more NREGS expenses?
NREGS is not subsidy. Okay. Subsidies are on account of fertilizer, food, petroleum, the standard subsidies which we calculate. Okay. So NREGS, I'm not sure where that will fit, but subsidies have gone up. Now, whether what will be the payout over the whole year? See, that's the hard part, because there is an allocation issue here. Okay. I'm telling you what has been reported in the first quarter. If they stay with the budget estimate, you may see a kickback effect in later quarters. Okay.
Well, fair point, sir. That explains the discrepancy between the GDP and the GVA, with indirect taxes probably falling and subsidy payments increasing, or maybe being made upfront. Dr. Anant, agriculture at 1.8% growth has come in lower than the poll that we did. Many people expecting it to be 3% because the Rabi was good. How do you explain this? Is this a price effect, or is it that actual volume itself was not very good?
A little bit of both. Okay. In part, yes, the price effect is clear, because if you look at it in nominal terms, the growth has been quite significant. But in terms of quantity growth, enough evidence from the second advance estimate and subsequently that the Rabi has shown slower growth. But more than crops, what we have seen is also a shortfall in the other elements of agriculture, particularly animal husbandry and dairying, where the growth has not been as much as last year.
Okay. Well, construction as well is a sharp fall. Is there anything more that we should understand, take away from this?
No, that construction has shown a fall, and that is a source of, should be a source of concern, and it actually shows up also in the fact that capital formation, which is a figure which has very large, if construction has a very large effect on capital formation, also comes in growing much less than last year. Those are areas of concern. Construction, remember, at this point is indicator based, and we derive the estimate from the indicators which feed into the construction sector. of which some of the major ones have shown very slow growth in the first quarter.
Okay. Well, actually, I wanted to ask you about capital formation shrinking by 3% and government expenditure rising by 19% almost. Your thoughts on both these?
In part, you've seen the effect of the government expenditure on the subsidy part. I mean, that will probably explain a very large part of the rise in government expenditure. Capital formation not picking up may have multiple explanations, including the early monsoon, which I noticed some of your commentators earlier in the session were saying. I don't really, at this point, have a much deeper understanding of why capital formation has not picked up, but capital formation continues to be slow. The other factors contributing to GDP growth have improved, so the overall share of capital formation therefore is not rising, in fact has fallen marginally.
Okay. Well, private final consumption expenditure rising at 6.7%. A quarter ago it was 8%. Should that be a source of worry?
No, I mean, at the end of the day, all of them will, something has to add up to the total GDP growth. So I wouldn't worry too much on it, but I think what we should be looking for in private final consumption, and this is where if you look at IIP numbers, the consumer durables, which has a much sharper linker effect, did come in a little weak in the first quarter. If that expenditure picks up, which may happen because of the good monsoon, if agricultural productivity picks up, we may see a rise in rural demand in the second and third quarter, which may have an effect on durable good consumption.
Fair point, sir. Two more worries. If the GDP comes in at 7.1%, among the most conservative numbers we have for the full year comes from the Reserve Bank at 7.6. From various brokerages, we have numbers of 7.7 and 7.8. Would you worry that a 7.1 GDP in the first quarter should lead to a lot of people bringing down their estimates for the full year?
I would advise that for the simple reason of what I said. You should look at both GDP and GVA separately. The GVA has come in for, as a marginal increase over last year.
Yes.
So, assuming that the GVA holds up its trend and we continue to see a rise over the last year numbers, then the question is what will happen to indirect taxes and subsidies. Now, which is where the full year effect is going to play out. As I said, we are constrained by the numbers we get. But if the government budget estimates hold up, as you quite correctly said, the budget doesn't show, we may see some reversal of this in later quarters. But that's an assumption. It is also, what relationship will actuals take to budget, we will have to watch the government expenditures carefully.
Okay, so if since the GVA has come in at 7.3%, one need not necessarily worry that the quantum of growth this time or the pace of growth this year will be, as bad as last year or better than last year. Almost all estimates expect at least a 40 basis point faster growth in FY17. Those hopes need not be dashed.
That's correct. And the second factor we should keep in mind is agriculture. What we are seeing is principally the tail end of two bad agricultural years.
Okay.
The expectation of everybody is that going ahead, and those effects will only be seen in the agricultural estimate for the agriculture year starting 16-17, which began on 1st of July.
Okay.
So on those estimates, which will have a benefit of a lower base, we may actually see an improvement in the growth.
So one final question, which is really technical. This discrepancy number is just mounting. It's 1.18 lakh crore discrepancy if you look at it in market terms, and if you looked at it in the real GDP table, even that is 26,000 crores.
Look, the basic reason for the discrepancy is that the expenditure, we have very little expenditure side data to make the expenditure side calculations. On a quarterly basis, we have virtually nothing. I mean, other than government expenditure, everything else is an allocation based on the production accounts. Now, allocations are rules of thumb based on details available on previous years, so you do expect discrepancies to exist. I think for discrepancies, the correct concern to look at is not quarterly discrepancies, but at annual discrepancies, which continue to be very low.
Okay. All right. That's encouraging. Dr. Anant, thank you very much indeed for joining us and explaining some of the confusions that we had from the GDP numbers. Okay, these are very important statements that he makes, that subsidies Probably upfront payments were made, but because of the high subsidies, the GDP looks lower. But this could get corrected in subsequent months. Also, if tax payments improve or increase, again, the GDP number could look good. We must take heart from the fact that the GVA number is not bad at 7.3%. We must also take heart from the fact that the GVA number is 7.3, despite agriculture being only 1.8. If agriculture, because of the better monsoon and an improved Rabi, hopefully, will grow to about 3 or 4%, then probably we need not as yet start lowering the hopes of a 7.6% GDP growth, which many people have for the current year.
All right. Thanks for putting all that down, Lata. But definitely, at least for the markets, it will be a worry. 7.1% GDP growth is coming in as a disappointment, but lots of things to watch out for going forward. And you heard TCA Anant give us specifics on why GVA number and that discrepancy is there in terms of indirect taxes being low and subsidy payout being higher in this particular quarter. So all those in terms of the data points to be watched out for, but disappointment from the GDP number is to be also seen and the reactions to that. Now let's take it forward.